Good morning. It's Monday, July 14th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So one thing I'll do is I'll look at the over weekend news and the flows and see what's going on here. One thing to note is that the dollar index, it did experience its best weekly performance in over 4 months last week. This comes following President Donald Trump's recent threat to impose more tariffs. So that raised concerns about rising trade tensions and also could lead to higher inflation and disrupt this rally that we have in the U.S. equity markets. As a result, the dollar index rose just under about 1% last week, marking its strongest performance since the week of February 28th. So I'll read a headline like that, which was in Barron's, Wall Street Journal, and other media outlets, and I'll look on February 28th, that week of what did the gold market do, what did the silver market do, and gold fell about $83 and silver fell about $1.45. So I just want to be aware that if the dollar continues to rise higher, it may impact and may rug pull some of these markets that we're involved with. Now looking at an overnight data check here, starting off with Europe and Asia, we saw European stocks, they fell after Trump dialed up his trade tensions here with the European Commission. Also, Asian stocks, they did edge lower as renewed trade tensions rattled that investor sentiment. So looking at the U.S. equities, we are slightly lower here after Trump's weekend threat to slap those 30% tariffs on the European Union and Mexico. And it's providing a test for the markets here that were recently trading near those all-time highs. So the S&P 500 down about 0.3 of a basis point at 62.79. That's down 21 points here. You do have the NASDAQ down 86 at 22,872, and the Russell down 8 at 2239. So looking at the other outside markets, the volatility index edging up just about 3% here. The dollar index just slightly higher. You've got the euro also slightly higher here. Some of the outside foreign currencies are a bit lower, and that's what's helping support that dollar index. Interestingly enough, you do have crude oil futures up about $1.50 here, trading right around 69.50 on that futures contract. You start to look at the chart pack, we're seeing a lot of upside objectives being hit and being met. Things like in the silver market, in the crude oil market, in the Bitcoin market, we're also approaching those levels as well. So back to the S&P 500, sitting at that 6280, we saw RBC, they lift their S&P 500 year-end price target from 57.30. That we're expecting another deep correction here on up to about 62.50. Now the market being at 62.80, that means that they're more neutral on stocks for the second half of the year. They're citing choppy conditions where Goldman Sachs, they expect the S&P 500 to rise by about 10% to 6,900 over the next 12 months here, implying that PE multiples and forward consensus are up near that 22 times. So earnings at 22 times. So staying with the S&P 500, looking at the chart pack, and if you haven't gotten the link to register below, you're going to want to do that. You'll register into the description, and we'll send out to you as we update it here every day markets are open. Now the S&P 500, you want to define your edges here. 63.30 is a resistance, 61.50 is a support. So if we take out that 63.30 on the upside, we could be marched on up to about 6,400. If we take out 62.25 on the downside, we could be pushing back down to that 61.50 level. If you are materially bearish on the S&P 500, on the stock market, you really need a catalyst here at a macro level. You need inflation back above 4%. You need higher unemployment. You need a major breakdown in the bond market. Now shifting to the cryptocurrencies really grabbing a lot of attentions over the weekend here, and we're seeing cryptocurrency exposed stocks in the pre-market trading significantly higher as Bitcoin rallied past 122,000 for the first time. Those tailwinds for Bitcoin come in the second half here. I believe that we have a 3-month price target about $130,000 and then a 6-month price target of $120,000. We may have to ratchet up that 3-month price target to about $150,000. I think that that's quite reasonable here because passing of legislation could provoke further ETF inflows into Bitcoin, especially in the second half. We've got Republican House leaders anticipating passing an industry-friendly stablecoin regulatory bill this week here. So President Donald Trump, he's already made digital asset regulation a priority in his second term here. And this legislation sets regulatory rules for dollar-backed stable coins, including requirement for firms to hold dollar-for-dollar reserves in short-term government debt or similar products overseen by state and federal regulators. So what's on the docket here coming out this week? You're going to want to look at some of the economic data and really pay attention to this because we have have nothing really coming out today, so markets are going to be very rosy and the picture looks fine. But as we get farther down the week, you're going to have several key global indicators to be released, including India CPI, Chinese GDP, US CPI, Canadian CPI, UK CPI, a lot of inflation data here. And then also you have an Australian employment report, UK employment report, and then US retail sales. Now the earnings, excuse me, I'm still sick over here. They are going to kick off for the second quarter earnings, and the estimates call for about 9% growth. That's down slightly from the 12% growth seen in the previous 2 quarters, but I suspect we're going to see multiple upside surprises. So the dip buyers in the US equities, they look to be holding their guard here and waiting like a scene like Braveheart to come back in and try and support this market. Now moving on to the metals markets, which I know what you guys are tuned in for, we're seeing silver. It really had a powerful breakout, a heavy volume, and it rose to one of the highest levels in almost 14 years. Now, is there a lot of gas left in the tank? I think so. So I think that we could see a substantial upside move here. A break through the $40 mark, which we're at $39.45, $39.57 was the high, $39.03 the low. We're going to want to pay attention to the ranges. Are they widening up? Because the average should range about 86 cents. We're trading at about that kind of level here in the overnight session. Nothing too surprisingly outside. We hadn't really triggered anything to the upside. So when I go to silver and I post this on the metals edge here, I'll start to look at what are the probable ranges. So someone will ask me, hey, could silver hit $40 this week? Well, I'll look and I'll say, hey, on a small volatility surge today, we could hit $41. It's $40.97 to be precise here. That would be a 3x move on a standard deviation of the implied volatility that we've seen over the last 3 to 5 trading sessions here. Now looking at some other things here, if we break through the $40 level, I think we could see this rapid move on up to 50. So the spread also between the London, and I have people, they'll chime in about, hey, the COMEX is going to default and CME is going to default on their whatever, the amount of silver that they have. Don't want to get down that rabbit hole, because what we're seeing is the spread between the London spot market and the September futures contract in New York, it continues to widen. It's similar to the start of the year when we saw worries about President Trump, his aggressive trade policies, and it triggered that surge in gold and silver shipments from London to the US. So basically, the COMEX now has record high amounts of silver. And then if you look at the LME, they have significantly lower amounts, and much of that silver is already claimed by ETFs and things like that. So their process is a little bit different, but again, that's another video that I probably should put out. Now you look long term on the silver market, you can do this yourself. You look at a monthly and a weekly chart, you go to that 1980 peak when the Hunt brothers, you scoop that all the way on up to 2011 when we saw that huge push upwards. You got the 1996 and 2004. That's the low of the curve here of the cup. And then you come back down here and you start to go to that kind of 2013, 14 lull point where it was really getting dire here. And you get the COVID low, and now we're pushing back up. And it looks like we can see a breakout. So that's your cup and handle formation. So your resistance points, you go back to 2011, 12, you're going to see 43, 44, we ran into some troubles here. We consolidated a bit. 48 to 50, it was a tough move here getting on up, and we did capitulate on a Sunday night, and it was a Sunday night that the Navy SEALs killed Osama bin Laden. That was the day that silver had peaked. So nothing to do with that. Could be some decrease in geopolitical risks. Who knows? But supply demand here continues to see a shortfall. You saw 2024 shortfall. You see 2025 shortfall. You're seeing global mine production. That peaked back in about 2016 here. It's really coming off, and the demand is increasing again. We've got solar. We've got renewed energies. So we've got some things that are taking wave, and that's why copper futures, I continue to think that the floor is rising on where the price is on the copper market, and I think that that spillover effect is taking place. Also, many of you that are involved with us on the trading aspect had been involved in many of these different metals already. Gold being the first one, saw a lot of people in copper in the second one, platinum, palladium, and silver. It seemed like it was a natural progression that the dominoes were falling, and that would be the latest one to take off to the upside here. Now looking at gold, Goldman Sachs, they reiterated their bullish forecast mainly on strong central bank holdings. That's the report right here that they released, saying that they expect prices to reach $3,700 an ounce by year end and $4,000 by mid-2026. So we look at the ETF flows here. Exchange traded funds, they actually cut 117,000 troy ounces of gold holdings, and then also the sales here. They also cut 2 million troy ounces of silver holdings here. It was the biggest one-day decrease since May 28th. So you look at that, and what's that tell me? Well, it tells me that they took profits. You get the breakout to the upside, and they take profits. So a 8.1% increase year-to-date percentage change on the silver market. Gold up 9.1%. So they reduced their gold holdings in the ETFs last week. They increased their silver holdings. They reduced their platinum, and they increased their palladium holdings. So the gold-silver ratio, 85-1 right now. So you guys got any questions? It's going to be a busy day again here with a lot of adjustments here in different markets. And there's a lot of outside markets that I'm looking at that are doing really well here. Things like natural gas, sugar could potentially be turning up as well. We'll look at the agricultural markets after that USDA report we saw on Friday. So you guys got any questions? Shoot an email, info@bluelinefutures.com. Remember, futures option trading, it does involve risk of loss. May not be suitable to all investors. Good luck and good trading.